year to date, they've bought about 1% of the Bitcoin supply. And ETH is a much more reflexive asset. It's much less liquid. I would actually think that there's a lot more of it that's just actively going to be offered. And so if you have anything like those types of inflows, I think 10K or higher is definitely on the table. And a few months ago, I probably would say 10K was pretty irrational slash very optimistic. And now that could be low.
This episode is brought to you by Arkham. Arkham allows crypto traders and investors to look inside the wallets of the best traders, largest funds, and most influential players in the crypto markets today. We'll hear more about Arkham later in today's episode. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Bell Curve. Just me and Vance this week holding down the fort. Michael 1 or 2 is, what is he? He's on an excursion this week. Where's he at?
He's doing some sort of climb, hike, run. It's like he's in his David Goggins era. He's lost a bunch of weight. He's looking really good, and I think this is the final countdown here for the full glow up. So good luck to him. I think he's in a tent right now of some sort. That's I don't do that type of stuff, so I'll be in the office.
Me either, man. I need a nice access to a nice warm shower. You will not catch me in a tent on a mountain, but
But
power to Michael.
but it's just you and me for a full hour and however long we decide to go. So
Hour and change, baby. That'll be great.
let's see it.
All right, let's talk about Tom Lee's decision to CTO ETH out of nowhere. This has been didn't really have this on the bingo card for 2025, but yeah, it feels like there's a full-on sentiment shift here. And I'll pull up the ETH dominance chart in a little bit, but that's been, I mean, ETH BTC and Bitcoin dominance are basically one and the same chart. They've been trending in down to the right direction for a long time. And it feels like there's a real bona fide sentiment shift. And between Tom Lee and Joe Lubin and some of the ETH Treasury companies, there's been a massive shift. And I think there was 725 million of inflows into the ETH ETFs, which is, by far the largest single day inflow in history. So yeah, what's behind the ETH naissance? What do you
ETH
think about all this?
Naissance. I mean, looking back, I think if you compare this to 2021, it's actually pretty similar. The ratio bled for a long, long time. Then there was this, new use case in this cycle. People were excited about stablecoins, RWAs, tokenization, which are just indisputably happening on Ethereum. You have people like Robinhood, and I was in Con for the ETH Con conference, and it was an extremely, extremely bullish conference in a way that ETH Denver and probably the other ETH global events have not been. And I would say the defining feature of it was just much more commercial, where you had real businesses opting into the L2 roadmap. And I think it was a vindication of that approach in the sense that all these corporations want their own thing. They don't really want to be built on a monolith L1. And then, you had before that, just the Ethereum vibes were pretty bad despite all the progress and adoption. And I think generally now it's turned around right on schedule. I watched like some Gainsey video about him shitting on Ethereum. It was like some hilarious live stream he did where he was, firstly talking about his net worth being like completely shelled, and then he was talking about how much he hates ETH. And I think that's pretty indicative of a lot of people who have given up, moved on. Maybe they bought Solana, maybe they bought Hyperliquid. And Tom Lee and Joe Lubin CTOing ETH and and by the way, yesterday there were it was like within $1 million of the Bitcoin ETF inflows. And so if that gets above, and all these treasury companies are buying, this was not on my bingo card, but it is what's happening. And I think if you are not holding ETH, you're probably pretty panicked. And yeah, I mean, like the thing about these treasury companies that's so unique is that year to date, they've bought about 1% of the Bitcoin supply. And ETH is a much more reflexive asset. It's much less liquid. I would actually think that there's a lot more of it that's just actively going to be offered. And so if you have anything like those types of inflows, I think 10K or higher is definitely on the table. And a few months ago, I probably would say 10K was pretty irrational slash very optimistic. And
Mm,
now that could be low.
mm. You know what is a hallmark of a crypto run is I saw an article that the ETH or the Winter Butte OTC desk had run out of ETH sellers, which is that's another classic crypto Twitter trope that recurs again and again. You always love to see that. But you know what? I also loved the way that Tom Lee described this, and we've talked before about this kind of discussion around um, just whatever the narrative was, like on crypto Twitter, not really mattering that much. But if you look at how Tom Lee is describing ETH, it's not ultrasound money, it's not world computer, it's not any of these things. Uh, it's the stablecoin chain.
Yep.
And then if you scroll down to what he describes here is, yeah, basically small caps and like basically IWM, the small cap index, and ETH are moving in sync. So Wall Street loves a chart of two correlated assets both going up, right? Um, and what he's basically said, like, this is kind of to summarize, like Wall Street speak for, yeah, people are looking for the next thing after Bitcoin. And you can't just say it like that on Wall Street. You have to, demonstrate it with charts and correlations and all that stuff. But I think that's, the simple message that's going to resonate with people. And especially we'll talk later about the Clarity Act just passed the House. It looks like Genius might pass. So it's already gone House, Senate, and then back to the House. So it might get signed into law even by tomorrow. But yeah, I think people kind of slept on stable coins and the importance there and how much that was going to be embraced by the establishment. And this is all happening on ETH and people aren't going to overthink it. So stablecoin chain
We
for the
we were
time being, man.
talking with a large family that they run, it's a single family office. They run probably $5 or $10 billion. It's a pretty well known tech founder. But I was talking to the guy, and what he said was, I've always really liked ETH. It's like the most you can kind of bet your reputation on it. It is kind of like this version of cypherpunk optimism with a lot of TVL, a lot of deep capital markets, a lot of natural advantages. And he was like, yeah, it's just been frustrating over the past couple of years where there's been nobody to tell the story, and it's just been really shitty because like we want to see ETH win, but it just didn't really seem to have its messaging and branding and priorities straight. And now with Tom Lee and Joe Lubin, you have the messaging and the narrative, and frankly, like the mechanical inflows. You have the ETF inflows picking up as well, which I personally think that the ETFs and uh, I personally think that the ETFs and the Treasury strategy companies can buy 10 to 30% of ETH within a year. Like $1 billion inflow pace on a $300 billion asset, you can buy 100% of it this year unless the price goes up. And so you have the confidence of these inflows in these Treasury companies. You have the narrative of Tom Lee and Joe Lubin, the stable coins. And then you have just kind of this perfect storm with Bitcoin stalling out as these older whales start to really sell between 10 and 11 figures of BTC. And so it's kind of this perfect storm of the ETH BTC catch up trade. And I was thinking about a prior fund that we run, and how we potentially should kind of add a bit more risk. And we own Bitcoin, we own ETH, we own a lot of different ecosystem tokens. And for me, you know, Bitcoin's above the all-time high of the previous cycle by 2x. ETH is still below it. XRP is above it. Like if XRP can hit an all-time high, why can't ETH? And I think, you pull CT and everyone hates it, but that's even more so of a hated rally and a reason why it's going to happen instead of, evidence against it. And I think CT is just losing relevance and also kind of losing its mind as ETH starts to rally.
I could not agree more that CT relevance is the lowest it's ever been. I mean, I feel like at one point when all of this stuff was just much lower liquidity and the space was much smaller, CT was distribution, and maybe it still is in the beginning stage of a project. It helps you get mind share, get your first customer, or whatever. But it's completely irrelevant now to the price action of something like Bitcoin or Ethereum. But where I do think CT is still relevant is it's kind of this pressure cooker for where narrative formation happens, right? A bunch of ideas get tossed out, people get told they're idiots, and you kind of coalesce around one thing, one
Yep.
line or idea, and then that finds its way to the Tom Lees of the world, the Michael Saylors of the world, and that gets broadcast out around the CNBCs and into the RIAs and the trading offices and all of that stuff. And so that's the way that I kind of think about it. Like narrative formation and then distribution are two different things. And I feel like we are beginning to see ETH distribution really take hold here. Also, it's just this is just a classic markets thing, right? Like Bitcoin, I know you've seen this a million times, right? The Bitcoin maxis were just riding a little bit too high. It's never going to be only Bitcoin. I've just never believed in that future. I love Bitcoin as an asset. I think it's great. But it was never going to be the only thing and the only coin. And I think it's just ETH's turn to run, and it's just as simple as that, honestly.
Yeah, and it's funny, like I'm in all of these group chats with professional fund managers and some just like crypto degens, and it's the universal punching bag is Ethereum. Like somebody posted a picture of a giant butt plug in this group chat that I'm in and was like, this is what ETH feels like. It's like, okay, like do you really care that much, or should you just buy some of this asset and just be chill about it?
Hmm.
Doesn't feel like they'll buy it yet, but they will. And I think it's just this overdone sentiment of ETH is the soy cuck chain, whatever. But I found that in most cycles, the arc of this technology is super long, and generally it bends towards Ethereum. And why does it bend there? I think it's a mixture of you know taste and culture and first mover advantage and frankly like the market moving more towards ETH in terms of this L2 roadmap. But I think if you look at the Solanas of the world, it's like the pump, and we did pump, we allocated to the ICO, and we're happy with it. We think pump is awesome. Um, but Solana is kind of like the meme chain. And for better or for worse, that's the branding that it has today, just like ETH had like the soy cuck branding a year ago. Bitcoin has the kind of like Bronze Age mindset branding, and I think that has less mileage than people on CT expect within Wall Street crowds. But Ethereum is this tech, product, and it's being pitched by Tom Lee, who is like the godfather of tech retail. And I think there's people who will say, you're lucky you got bailed out by Tom Lee, being super bullish ETH. And I don't know, maybe that's true, maybe it's not. It doesn't really matter. Like it's path dependent, and this is the path we're on. So you can kind of cope about it, or you can buy it, but like you can't really do both.
Well, you can't really say that ETH got bailed out by Tom Lee and not acknowledge that the enormous impact that Michael Saylor has had on Bitcoin, right? I mean,
Totally.
it's the same thing, right?
And look, there's
Um,
also been real work done by the Ethereum Foundation in reorienting their priorities, restaffing the organization. Like even the ZK proving, going all in on that is a reflection of the concerns that have been voiced over the past 2 years have been heard. And now that you have that, I think you're going to see a lot of things additionally come out around what the new priorities are for the Ethereum Foundation and for these treasury strategy companies. On top of that, how they interact, the Ethereum Foundation selling ETH to SBET, uh, like it's a much more commercial focus than it has been in the past, where we're trying to save Guatemala and sea turtles with ETH donations. I think that everyone being up in arms and pissed was good. Like we did have to kill Ethereum so that it could live again. But I think it's very much alive, and just I don't know. We've talked about a lot about if you really hate a certain asset, you should probably just buy some. I think there's some wisdom here that definitely applies.
Arkham was created to make blockchains human readable and simplify blockchain data so that it is meaningful and useful to the average crypto user. With their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. To get started, follow the link in the show notes below. We're entering crypto's cloud era, and EigenLayer just launched EigenCloud to power it. Just like AWS transformed the internet, EigenCloud is a full developer platform that gives developers cloud-grade programmability with crypto-grade verifiability on any chain. To learn more about how the Eigen token is securing a new class of verifiable apps and how to get exposure to this growing class of crypto infrastructure, follow them on X at EigenLayer. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Speaking about hated assets or hated rallies, depending on which corner of crypto you live in, we should talk about Pump and the Pump ICO. So, Pump did an ICO over this last weekend. I'm not sure. I know, yeah, you guys have mentioned that you participated in the ICO, so I don't know if you have any information here. But I thought it was interesting they decided to do it on a Saturday and a Sunday. So it went live. It sold out in 12 minutes, which is super super impressive. Some of it, I think it was spread out. There was inventory on some of the centralized exchanges. You could also purchase directly from Pump on chain. Infrastructure was very smooth. I didn't hear about any hiccups happening. And I saw, post day one trading, like 500 million, maybe 530 million and change of that volume happened on Solana. Another 135, 140 happened on Hyperliquid. And then there was an enormous drop off to the centralized exchanges, which was cool. We like to see, no matter what Ethereum, Bitcoin, Solana camp you're in, I'm assuming that you're voting for decentral like DEX volumes over anything else. So that's great to see. Um, it was a $4 billion valuation. They raised, I think it was 750 million. Was the number
I
that they
thought I
ended up
thought it
raising?
was 1.4. I thought it was
Oh,
much
1.4.
higher than that.
Okay,
Yeah, yeah, yeah.
1.4. 1.4 into the platform. A certain percentage of that, or a certain amount of that was for institutional investors. So initially we heard 100 million, 200 million. I think it came in closer to 700 million. It was oversubscribed, is kind of the TLDR. And it was a mix of retail and institutional buyers. We put together some research on this, but actually like the median buyer price for retail was like $400 or something like that. So retail
Hmm.
loves Pump and retail bought into Pump, which is really cool to see. Um, and then yeah, it's been trading. It's trading now. I'll pull the chart up, but it's around what it ICO'd at. So I think it's about 52 cents. Yeah, 52 cents and change. So about $5.2 billion FDV and $1.8 million of market cap. But yeah, I'm curious to get your take here on anything, just like how it went. What Pump's prospects are, meme coin market, like whatever, however you want to take it.
Yeah, so maybe starting with the asset, and then Pump itself, and then talking about kind of the launch and what that might mean. So uh, I would say we're like pretty bullish on the meme coin economy. I don't think it's going anywhere. I think there was a long time where I probably wished that it would just die, and it didn't.
Mm,
And so I think the testament of strength made us bullish on Pump's prospects in terms of, if you're thinking about Solana as like the meme coin chain, but 90% of the activity is driven by Pump, and then Pump monetizes at, roughly probably I would say 500 to 700 million of run rate fees with all of their kind of DEX primitives vertically integrated. Pump is doing as much revenue or more than Solana, and yet it's valued at 2 to 5% of Solana. So I think there's a valuation discrepancy between the two, where for us, Pump is just a much cleaner bet on Solana adoption than Solana itself. And so like I think there's people who are like, well, betting on Pump is anti-Solana or vice versa. Like, look, this is just the world that we live in. I didn't create it. So we allocated to Pump. I'm quite bullish on what Pump is building on the consumer side, the streaming, the mobile app, the ability to combine, news with meme coins with ephemeral assets. I think is really interesting, and they're the best to do it. We saw that, the Bonk, I think Launchpad flipped Pump at some point, for the 2 weeks prior. I would say about that, when something like that happens, it's not like there was this organic groundswell of activity that just decided to go to bonk and like, oh, they flipped it and it's like way different now. No, like Pump has the brand, it has the users, it has the mobile app, it has the know-how, and now it has $1.4 billion of cash. And I think the thing about the Pump team is that they're growing quickly, but they're also not scared to try things. And so if you're shorting this asset, you should know that they have $1.4 billion on the sidelines that they're willing to use against you. So that'll be pretty interesting. On the launch itself, I mean, the biggest winner was Hyperliquid by far. And it's a testament to the coordination of the ecosystem, but also the execution capabilities of the Perps exchange that they are able to dwarf the spot volumes of Binance and OKX and Bybit. And so I think, decentralized exchanges continue to lose relevance. They continue to lose share of the highest margin profit products that they sell, which are these new coin launches. And really all they have left is Bitcoin and ETH that are, Hyperliquid has 30 to 35% of the OI of both of those coins. So it feels like the Binance and Bybits of the world are just stuck in 2021 while everyone else speeds ahead. And there's people in these group chats that I'm in that are so pro hype that they're shitting all over Pump and vice versa. I think my approach is why not both? I think they're very different. I think they're very different ecosystems, and we think both are the future. And so yeah, I mean, I'm pretty positive on Pump, and like people have said, Noah and Alon are very wild, and all this stuff. But I met them in 2019. They've always been like this. Um, so like it's more of the same, and it's worked so far. So I don't see why I would stop now.
Mm. So I think that there's a couple of. I was actually just talking to just did a podcast with Austin Adams. On this, Austin is one of the lead researchers on Uni V4. He's been in the world of DEXs and Uniswap for a very long time. Is now doing something called Doppler, which is really interesting, a Uni V4 hook. But we were talking about this whole world and landscape of. So I think part of the story here is Axiom is a successful trading platform which has taken up a bunch of trading activity on Solana and meme coins in general, and is now responsible for here. I'll full screen here, but you can see they're responsible for about half the volume on Pump and bonk.fun. And you could view this in one of two ways, right? You could either view this as bonk or Pump getting disintermediated and losing access to their like kind of the customer, or Austin's take was kind of the opposite. And he's been at Uniswap for a long time and noted that the Uniswap has these proprietary distribution methods, right? They've got the wallet and the front end, and the
Yep.
share basically the share of flow that the front end and the wallet are directing to the underlying protocol has gone down over time, but volumes are up. And actually, the idea is kind of okay, these are two separate things, right? There's like kind of a brokerage, what platforms are people going to use to trade, and then the underlying protocol. And that was his view on Pump, is that it actually doesn't really matter that much where it's coming from. It's actually good. You want to see a diversity of different platforms directing flow to you. So yeah, I thought that was an interesting take. And yeah, I think very much Pump could be like it's the only one that has any kind of brand in this space at all. And historically, winners have kind of stayed winning here. So yeah, I think it would be tough for Bonk to compete here, sustainably.
Yeah. I mean, for us, these are the shots that we have to take where something's
Hmm.
working. Sure, there's going to be hair on it. There's always some sort of hair on it in crypto. It's
Hmm.
very divisive. People hate it. People love. Same thing with Hyperliquid, honestly. Um, but these are the swings we take. And do I think that Pump has a chance of unseating someone like a Robinhood long term? I think it's a slightly different market, but it's certainly possible. And the outcome for that is just multiples of 4 billion. Where it ICO'd.
How do you think about Pump's business model long term? I mean, do you slot it as like a? Because on one hand, you could look at it as this is very similar to a Hyperliquid or Robinhood, and they're going to compete as an exchange brokerage kind of hybrid. Or I mean, one way that I've been thinking about it a little bit is like they very much view themselves as being in the creator business. And I've spoken to
Hmm.
Alon too, and he kind of describes their business as competing on the exchange front, but also with social media platforms, right? Like they brought live streaming back recently,
Yep.
and it talks about competing with like the YouTubes of the world. And one way that you could also view their business is almost like an OnlyFans kind of business, right? Where you have it's a
Hmm.
little illicit, right? There'll be some people that kind of look down their nose at it, but it's still obviously a phenomenal business and business model. And the business model there is you're bringing in creators, and creators monetize in the way that they're going to monetize, and you take a slice of that. Like, not that it really matters, right? But which in a sort of bucket do you kind of, if you were to look at their business through one lens, how would you describe it?
I mean, they have the proprietary flow from their mobile app and the streaming, and I think they're going to take a real shot at incentivizing creators who maybe are not, streaming on OnlyFans, but they're certainly, deplatformed for this, that, or the other reason from like Rumble or Kick or YouTube. And there's a lot of those people, and there's a lot of them that can generate serious economics. And so, like you think about Robinhood, you think about Coinbase, but there's also like eToro, there's Kraken, there's public.com. There's so many of these things. There's going to be more than just one exchange slash consumer play within crypto. And like to date, there's like Hyperliquid and there's not even another one. So the TAM here is pretty unlimited, and I think a 4 billion price for the ICO is pretty fair. Um, and I think the other hits that we see on Hyperliquid are, or sorry, on Pump is that only 25% of cash is going to be used to give back to the token holders. In our discussions with the team, they've said that 75% is going to be used to reinvest with the platform and pay creators and aggressively growth market and grow the team and make acquisitions. So I think the crypto natives sometimes view the revenue and earnings of a protocol as either like go to pump token directly or go for Team Lambos. I think
Hmm.
the truth is it's much more nuanced where a lot of these protocols that are built are not going to just you build it and they will come. You have to reinvest on the growth side, which doesn't go directly to token holders, but maybe indirectly. And so, I think it's just about being patient. And what I've seen that I've kind of been surprised by is just how impatient the airdrop community has been around why aren't they buying back today? All this stuff. Why aren't they? It's like, man, it's been a week, or it isn't even a week. It's been like 6 days since this happened. I think everyone needs to just be a little bit more patient.
I think the 25% number feels quite fair. I've been a um for protocols and businesses that aren't mature, it hasn't really made sense to me. Why would you like, especially using the proceeds from a raise to buy back the token is just insane to me. Now Pump's actually generating a lot of revenue, right? Like, so that actually does make some amount of sense. But I've always
Right.
been more in the camp of reinvest into growth. I do think, I was going to ask you about this too. 1.4 billion plus. I don't know how much of that I think cumulatively they've done some 750 million in revenue in the last 18 months or so. That's, I don't know how much they spent on either creators or their team or development or whatever, but that's a lot of capital to allocate. For a pretty small and definitely very talented but very new team. So I actually don't hate, returning some of that to investors as long as it's coming out of cash flows. Just from a pure capital allocation standpoint, that's a challenge to allocate that much for anyone, for any new org, right? I was gonna kind of wanted to get your take on, bless you, on
Thank you.
that side of things. But yeah, 25% seems reasonable, and I agree. People are super impatient in crypto on the buyback.
Right. I think eToro is worth 12 billion. You think
Hmm.
Pump should be worth more than eToro? Like,
Yeah.
there's so many of these small businesses that don't really make a ton of sense in public markets, and the token ones are kind of being shunned. But as we know today, your token is only one treasury company away from being revalued. So there's just so
Mm,
many things they can do to create value here. In my mind, just passing back money from the treasury to token holders is probably the last idea I would have. I think you got to keep the token. At least IPOs want to keep it above the IPO price. That seems to mean something. Maybe there's a kind of an idea there from Pump, but I'm content to just wait and watch this grow. We certainly are not, intending to sell this at any point in the immediate future.
mm, yeah. Well, I always root for people that are taking big swings, and yeah, I'm rooting for the Pump team. Think it's super interesting where they end up
Totally.
going. I I think there's a lot of lessons to be had in terms of, there are, in the same way there are launchpad wars today, there are also streaming wars, and Kick
Yep.
executed a pretty successful coup of a marketing campaign right against Twitch streamers that kind of just went around to the top 10 or 15 and paid them a boatload of money and switched them over, and they actually seemed to do pretty well. So I don't know what I would do if I were. I mean, having thought a little bit about creators and onboarding creator talent and things like that, you might do a barbell strategy here where you try to bring in and home grow your next, PewDiePies and Mr. Beasts and whatever. But also, don't be afraid of, if you've got a war chest, throw it around a little bit and bring some of these streamers in.
Right. And
Um,
and a lot of people have thrown that idea around and nobody's seriously allocated a lot of capital and good execution towards it. Would I be surprised if they got someone like Speed, and they paid him a boatload of money and he brought a ton of investment and platform attention and, price appreciation to the token? No, I wouldn't be surprised at that. And
mhm.
I think you do have to kind of put that into your underwriting of a project like this. It's obvious that they're not just going to let the metrics and the KPIs and everything else bleed out. So then you have to ask yourself, what are they going to do?
Agreed. I don't know if you've looked too much into this, but I still like Zora in terms of their tokenomics here. What they've done, they have a very neat way of having, like, they've tokenized every post, right? So all the trading fees from all the posts in an AMM gets paired with the creator coins. Then all the creator coins pair with Zora. So it's a very neat value accrual stack from. You bring creators on who do banger posts that generate a lot of fees that accrues to their creator coins, and as the creator coins goes up, the Zora coin should go up as well. And even though they might not have that construction in Pump, I would guess it's going to be similar sort of thing, right? It's you bring a lot of eyeballs, talent, people create good content, good coins. I actually wonder if, I mean, sort of a joke comparing it to OnlyFans, but not really. And
No, I think they would be like, yeah, like I don't think they would be offended by that. I think OnlyFans is an amazing business.
if OnlyFans didn't have the stigma attached to it, it would be one of the most successful tech outcomes in the last 5 to 10 years. I mean, just in terms of cash flow that business is generating and mind share, it's completely dominant in their category. But I actually wonder. I've heard that like the OF models are like a good recession indicator kind of thing. I've heard that anecdotally that slowed down. I actually wonder if they would be a good fit for this. And do you remember there's a guy, Amin Soleimani, who's kind of like one of these
Oh
heart and
yeah,
soul of
I know. I
Ethereum
mean,
kind of devs, right? And what his original project that he gained steam for was something called Spank Chain, and the idea was that
yep.
porn stars are typically very challenged in getting banking relationships. And I do wonder if, yeah, I feel like if you know I don't know. Advice for free idea for the pump team, which you can feel free to ignore. But probably if you onboarded porn stars and had them start making coins, like people would trade that stuff. Definitely. You might get some
I
true
mean,
fans
who
there.
who who are we to cast aspersions? We've been in crypto for so long, and we've seen the stigma firsthand. Obviously manifest, and then when that stigma removes, the price appreciation can be pretty substantial. So I'm all for betting on people that are taking big swings. And there's a certain camp of this industry that has written books like Read, Write, Own, and it's so prescriptive that it can only play out in one way. And I think the reality of life is that things kind of like play out kind of how you think, but like there's a slight twist, and can you get comfortable with it? And I don't know if Andreessen allocated to Pump Fund, but this is consumer crypto, whether you like it or not. So either take the swing or write the thesis off entirely.
Mm. And I think that there's you need. I mean, it's the name of this podcast, but a right and a left curve. And anything in crypto that's felt overly lofty or prescriptive around like kind of utopian in its ideals and like it would be perfect and kind of like it's someone's imagination in their head, that stuff just really tends not to work super well. Whereas you need, something that's going to change the world and impact things in a positive way, but it also has to, have a base. It's got to get the whatever, not the the limbic system part of your brain activated, right? You need your base, and I don't know. I feel like that the first iteration of that is trading and speculation. Like people want to do that. It's not something you're going to write a book about or change the world, but it's real. It's a real desire. Same way was porn was for the internet, and
Hmm.
I don't know. Then you can build better things on top of that. But you need both
Totally.
sides,
And
I think.
look at what Grok is shipping. They shipped AI companions, waifus. I'm sure everyone is not super excited about that as the future of AGI, but that's where we're at.
Also, yeah, I think that was actually a really. I thought that the pump marketing video that they did was the first genuine like Gen Z coded marketing that I've seen in crypto. People have knocked them for
Hmm.
this like spastic like that. You know what? I don't. The
Zoomers
'90s
love
is
it.
kind of Zoomers. There's kind of a resurgence here of like '90s, even like the style, like baggy, like the style is back. A
Yep.
lot of the pop culture today, it looks like it could have gotten ripped out of like shitty late 80s and early 90s music videos. And yeah, I actually thought that Pump didn't get enough love for this. Like it was very Zoomer coded. And
Throw out your skinny jeans.
crypto,
We're back.
Over the years, we have seen a multitude of hacks, rugs, and bundled launches. The number one way that crypto traders can protect themselves and the wider community is through on chain analysis, knowing who is moving funds and where those funds are going. Paired with their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham's exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations, bringing them the world's first exchange powered by crypto intelligence. To get started, follow the link in the show notes below. EigenLayer is ushering in crypto's cloud era with the launch of EigenCloud. EigenCloud is a full developer platform that gives developers cloud-grade programmability with crypto-grade verifiability on any chain. EigenCloud's use cases don't stop at crypto. AI's rapid growth is reshaping how we live, work, and connect, which has simultaneously made it today's most important and least trustworthy technology. EigenCloud has arrived just in time to enable verifiable AI infrastructure with crypto economic guarantees, where incorrect behavior gets financially slashed. This isn't about picking winning apps or chains. With Eigen, stakers can own the fundamental building blocks of the verifiable cloud. Every application built on EigenCloud draws security from staked Eigen tokens. Every crypto economic guarantee is backstopped by slashable staked Eigen. To learn more about how the Eigen token is securing a new class of verifiable apps and how to get exposure to this growing class of crypto infrastructure, follow them on X at EigenLayer. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
All right, should we talk a little? I would love to get your take on what's going on from a regulatory perspective here. So we had the Clarity bill pass, or the Clarity Act passed the House, right? So it's going to go to Senate, where I've kind of heard anecdotally it's going to be a little bit trickier maybe, and there might need to be more concessions. So as a reminder, this is what happened with the Genius Act, which is a stablecoin bill, passed the House, got rejected in the Senate, had to go back. There's a bunch of back and forth that needs to happen. But we got through the first major bill for Clarity, which is the updated FIT market structure bill. So you want to talk a little bit about that, about just, what the latest of, I don't know, to your knowledge of what's in that bill, why it's important, and, what do you think the odds are that this thing gets passed relatively soon?
So I think, I understand the high level. I haven't kept up with the various drafts because the way these things work is, it passes the House or passes the Senate, then it goes to the House or vice versa. Then the other chamber of Congress comes up with their version. Then they make all these trade-offs and then they meet in the middle. And so I try not to spin my wheels too much with the drafts, but what is coming is a robust disclosure regime about who owns tokens, what the decentralization status of a network is, if it can be considered a commodity versus a security. There's grandfathering for blockchains that pre-exist this act. There is a compliance period of, I think, 3 years for people to come into compliance with the new bill. And then there's also retail fundraising conduits where you can raise up to, I think it was $75 million in the last draft from retail each year, as long as you're registered. For token insiders, it also comes with disclosures about buying and selling. So if you own more than X percentage of a token, you actually have to register with the SEC and make public filings at any point you want to sell. And obviously this all has a grandfathering component and then a adoption, time lag component. But the game is going to change and it's going to become much more institutionalized. And I think it plays to the favor of, frankly, like decentralized chains, and it really enshrines the importance and the benchmarking of what is decentralization. And it really plays against things that are, frankly, like just more scammy in nature, whether it be low float, high FTV founders that have bad intentions, or it be, meme coin launch pads that are selling unregistered securities. Like that will get very, very much harder. But for the rest of the field, it will institutionalize it. And the goal here is to allow a pathway for new applications from traditional financial institutions and startups to flourish. But there's going to be significant changes to rules of the road. And so I think, people like venture balloonists or Sisyphus that just shit on, a lot of the bad behavior from VCs and founders and that stuff. I do feel that at a certain level, their concerns have been heard and are being addressed by these bills, which is a good thing.
I agree with that. Also, I think I kind of knew this in the back of my head, but it's been surprising to see all of these different points of anecdotal data support it, is that institutions weren't going to, move and deploy and get interested on, oh, I think that there's going to be clarity eventually. As we've gotten closer and closer to the Genius Act, like it's been really apparent that they're going to wait until there's actually, something signed into law before they make their move. And as we've gotten closer and closer on the stablecoin front, I think everyone in this audience can feel the anticipation building, right? It feels like we're on the doorstep
Hmm.
of massive growth in that sector. And I think the same thing is going to happen. This is what we've been missing on the token side of things. So
Yep.
yeah,
And I think
I don't
it
know.
comes at a good time too. It feels like we have, we did ICOs that were unregistered, we did NFTs, we did meme coins, we did low float, high FTV professor coins, we did VC shit, we did all this stuff. And now we're finally getting to a point where people are most interested in fundamentally driven businesses, earnings power, buying
Mm,
back your token, and tech optimism that is rooted in reality and regulation. And so I think this is very positive. I think it will cull a lot of the bad behavior or push it, offshore to the extent that even maybe a Binance doesn't want to deal with it. So that universe will shrink and the legitimate universe will grow. I think, retail will have to change with it. There is no more, probably free airdrops to a certain extent, just like traditional equity companies don't give out shares for free. That's part and parcel of how this goes. And so the game will always change, but to maintain the dynamism and interestingness of crypto and the up only nature, you do need to change the rules for the better, especially now when we've kind of speed run all of these metas and people are showing signs of exhaustion with just the same old bullshit from the same founders and the same VCs. So I'm glad to see it happen.
I agree. I completely agree. We need some amount of revitalization here. And
Totally.
I think, yeah, we need revitalization, right? It's been so this like lopsided or just this barbell of it's either Bitcoin or, complete degenerate trading that's working. And we just need like some healthy middle ground here,
You need meat in the sandwich. I think it's going to happen. But some people will be left behind. And I think those are the
Mhm.
people who are more rooted in the, in and out tourists using crypto to make money and then never coming back. Uh, that's just probably not going to happen as much going forward.
I agree. I wanted to uh, share here, or actually talk about something a little bit different, which was it went a little bit under the radar this week, but Coinbase is rebranding their wallet to Base app. So I mean, I'll read the TLDR here, but Coinbase Global is rebranding its Coinbase Wallet app as Base app to consolidate social, chat, payment, and trading functions. The company launched the Base blockchain about 2 years ago. It has generated millions in revenue, becoming central to its payments push. The Base app features include Base Pay, an express checkout option, and a sign in with Base feature for quick sign ins into online apps. And I think the way that at least I read this story is everyone is chasing, there's this kind of somewhat old idea in crypto that I think the exchanges are all now pursuing, which is the everything app. And there's, people have talked for a long time about there's WeChat and Alipay over in China, and there hasn't really been that in the United States for reasons X, Y, and Z. Maybe because the incumbents have a little bit more of a regulatory advantage here in the U.S. And payment rails are a little bit more uh, you know outdated. But yeah, I think a lot of crypto exchanges see the opportunity to create this for crypto, and we talked about this a little bit in actually the live Empire bell curve crossover that we did. But yeah, I'm curious what you think about this because it feels like Coinbase and Robinhood and a lot of the Asian exchanges are actively pursuing this vision, and I'm just curious about the likelihood that you see it working or not.
I think, I mean, look, my perspective on renaming your app from Coinbase to the Base app is that that is a dumb decision because you have enormous brand equity with Coinbase and nobody knows what Base is. So
Mm,
you don't get points for difficulty in consumer applications. I used to work at Netflix.
mm,
Michael was at Snapchat. So we've done a lot of testing around, retail funnels and how they come through or fall out. I would expect this would add, 20 or 30% to people who just look at the Base app in the App Store and just say no.
mm,
But I do think, at the end of the day, each of these companies is going to have their own wallet to interact on chain. Robinhood will have theirs, Coinbase will have theirs, Kraken will have theirs. I think it's a question of uh, a wallet is a really unfamiliar concept to consumers in the sense that when you go on Instagram, you click on Instagram, and Instagram is your navigation for Instagram. Uh, wallets are more akin to web browsers in the sense that like you're accessing the open internet through uh, a browser, and you're doing the same with a wallet on chain. But most of these things will look very, very similar. And where a browser is like very, very light, and you're mostly looking at the web page, in a wallet, your front end is that wallet. And so I think there is probably more real estate there, and it's really important to do better as a result versus a browser. But I do think like, why would somebody use Base versus MetaMask versus Robinhood Wallet? It probably has something to do with where their actual account originates from. And so, like,
Mhm.
as an exchange, you probably can't afford to ever have someone use their own wallet on your, financial ecosystem, even if it is on chain. So all of these people will build their own, but I mean, I would probably not rename it from Coinbase. I think that's pretty
Mm.
silly.
Yeah, I wonder. I wonder what their plan eventually is around Coinbase versus Base. It's hard to understand what their long-term vision is here. And I don't know if you've been following on like DEX trading volumes here, but Binance, like BNB, is pushing a lot of volume towards Pancake Swap, and there've been like Kraken has launched Inc, which feels like they're kind of copying. To be honest, it feels like they're a little rudderless and following Coinbase here. But also, what was the other? Bybit is launching on Solana here, and if you look at that, there's a great chart that I feel like everyone that's rooting for crypto, no matter where you sit in this stack, should be excited about. It's just the Sex to Dex ratio chart.
Oh yeah, where's that at? I haven't looked at that recently.
I'm gonna pull it up. It's in a good place. It's basically up and to the right here. So yeah, I mean, it's doing quite well. And a huge part of this is Hyperliquid, right? It's fun. You can kind of filter and actually see the percentage of Binance volume, but Dex
Wow.
is flipped. Yeah, Binance volume
Wait,
back in June.
wait, did this go to
So
100%?
yeah, this is of all sex volume here. So this was, we peaked at around 62%. And we exclude, by the way, we can get into the method, but we exclude some of the shadier sexes here, which are definitely just doing wash trading. And then you can toggle it to see what percentage of Binance volume. So it flipped Binance volume back in the beginning of June. And you can do the same for Coinbase. It's way more than Coinbase's volume. But
Man,
yeah,
that's so crazy.
so
Like this
I
chart,
wonder, yeah,
this chart
yeah.
makes me think of two things. Number one,
Mm,
um, I mean, we started our first one in late 2018 to invest in DeFi, and we thought DeFi was right around the corner in terms of flipping centralized exchanges. And I think the thing that I've learned investing is just these things take forever to play out. Forever,
mm,
forever, 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 forever. And usually you will get the idea right, but you'll get the time scale wrong. And then you'll probably get the company wrong as well in terms of, is it GMX, is it DYDX, is that going to be the decentralized buy, and then it's Hyperliquid, like 6 years later.
yeah,
And I think, it's kind of like the search engine wars where Google was like the 800th search engine. It just happened to win. And then there were people that were so traumatized by those wars that when the Google IPO came out, they just said, no. And there's a very famous John Doerr quote, who led the, I think, Series A in Google, where he said, right as Google was about to IPO, that we've never paid, I think they got 15% of Google for $10 million. They said, he said, we've never paid as much for such a little amount of economic value. And that was his like synopsis of where Google was at the time. But then like the market grew, the search engines grew, they won the search engine war, and then like you had like, I'm sure, like a similar chart to this where obviously there's no on-chain versus off-chain analogy for search engines, but maybe the analogy is like the yellow pages versus Google. And
yeah,
it started at 2%, then it went to 10, and then it went to 100%, and then it went to 10,000%, and then yellow pages ceases to exist. And I do get the sense that the centralized exchanges of this world today are kind of the yellow pages. Maybe Coinbase is the exception, but the ones that seem really challenged right now are the overseas centralized exchanges. I don't know what the future of Bybit or Binance is. I think a lot of their traditional advantages have been eroded, and they've probably reached some sort of ceiling in terms of onboardable customers that are willing to play their game. And I think that's a net good for the space overall.
Mm. Yeah, and one of the things that's just been so challenging for them is it's their listing process, right? Like Binance kind of takes its pound of flesh, so do a lot of the other sexes. But in addition to that, it's just the sheer amount of assets that come online that people want to trade. I mean, this is the advantage of a DEX, right? You can just spin it up; it's non-custodial, trade from day one. I think we talked about it at the top of the episode, but yeah, more trading happened on chain, right, for Pump than centralized exchanges by a pretty wide margin, at least in the opening salvo. And part of that is too, right? Like, why did it take these sexes so long to list Hyperliquid? They view it as a competitor.
They still haven't listed it.
So yeah, so yeah, I think that I completely agree with you, by the way, on the timescale thing. And I also think that, yeah, people will probably be exhausted. They'll be like, oh, I tried, I invested in this cat. Same thing with L1s too, right? Like, it's funny, like, still 10 or 15 years later, however long we are into this experiment, it's like L1s and exchanges are kind of still the big category winners, right?
Right.
Like,
Then like there will be a point where it feels that there's no new innovations and you feel tired and you feel that, maybe you're not investing in the right things, but like you just have to keep, like if you have the conviction, if you have the thesis, like the power of staying put, of staying with the same thesis, of investing in, if you whiffed on DYDX and that didn't work out, like do you have the stones to then go allocate size to Hyperliquid because it looks like it's finally playing out? It's really like a mentally tough game, and I think even like with Ethereum too, like CMS Holdings tweeted, I think if you've been in crypto for more than a decade, it's like 3 years of head trauma in the NFL. Like there's
yeah.
there's people who I think have lost their minds holding Ethereum, like not even being in crypto, just like holding one of the single assets. And so yeah, it's a war of attrition. It's a psychological game.
Mm. Yeah, you just got to not give up. I think someone wrote, I've probably talked about it on this podcast, but they mention crypto, the concept of a winner and a loser's game, and tennis is the famous example here where people studied tennis and there are two games that are being played, and
Hmm.
if you're really good at tennis, you win by hitting the best shots, right? Or like doing spin moves and like very, professional kind of moves to best your opponent. But most people actually play a loser's game, which is a war of attrition, right? Which you're just trying to bop it over the net until your opponent fucks up and hits it out, right? Winners and losers game. And this person was talking about crypto transitioning from a winners to a losers game, but I think it's always been a loser game, right? Like, just stick it
Always.
out. I mean, there's so much alpha in just surviving and lasting longer than other people. Whatever you can do mentally to get yourself to that point is huge. But I also think there's some wisdom too in just, yeah, not overthinking it and doing. There's so much you want to do more than you should, right? And
Right,
I do
because
think
it
that
feel
we're
it feels like
we're
work.
right, yeah. But sometimes the right move is to just do nothing. And I do think that we're about to see consolidation in some categories that haven't seen consolidation for a long time. Like, it's new L1s are on a, yeah, it's going to be very tough to break in at this point. I do think there are a couple that I'm excited about, but yeah, it's really tough to break in at this point. Exchanges, you're probably going to see consolidation. I think you're in like the winners stay winning kind of phase of
Hmm.
crypto. Um,
Yeah, yeah, yes
I
and
have,
no. So I think on the psychological losers game, just bopping it over the net, staying in the game, whatever. I think that's why uh, the framing of a cycle is important, where you just have this thing where you're like, man, this is really bad, and maybe ETH doesn't come back this time, and then you just please refer to the rainbow chart. We're right on track. We're at the
yeah.
bottom end of the rainbow, but like we can get to the top end. So I think that's
Hmm.
useful for that. And then on the winners versus losers game, I think it is a winners game right now, just because some of them have revenue and earnings, and that's a really powerful story to tell in a sea of things without revenue or earnings. But um, my sense is that you're going to see some sort of broader based alt rally. It obviously won't be everything, but there's a lot of stories that have yet to be told, and these treasury strategy dynamics give you a financial lever to pull if you want to force that. You don't need to go door to door to retail asking them, buy my coin for this, that, or the other reason. You can kind of concentrate the buying power into one entity, funded by the convertible note universe and other ATM and equity participants. So there's just more levers to pull. I would say it's still a winner's game, but the losers can turn into winners faster than people think, per our discussion about Ethereum. Like the most hated assets are hated because they are oversold, they are kind of maligned from a narrative perspective, and they haven't pulled the levers that they can. But when they do pull those levers, things can change very quickly. So, I wouldn't be surprised to see that be the case for a lot of different assets as well.
Mm. Yeah, just a note here as well. I just saw the Genius Act officially passed as well. So we talked about Clarity, which is the market structure bill at the top of this episode, but Genius Act passed 307 to 122 votes. So it's a pretty wide margin. So yeah, I'm reading from Jake Travinsky here. President's going to sign it into law tomorrow. We have stablecoin regulation in the USA. So
boom.
Pretty freaking
That's
cool.
Great.
Should be bullish for ETH. So load up on the
blue
coin. I mean, not financial advice, but yeah, this should be good for
the blue coin.
Here. Cue the Eric Trump quote. Yeah, for the blue coin.
Yeah. I'm just in the stage of my life where, Bitcoin's doing well, ETH's doing well, maybe Solana's down a little bit, but like I'm not, trying to like drop the people's elbow on things that are dying. I probably am a buyer of those things at some level just because I think they will come back. And I think there's so many people who are stuck in the my coin dynamic where it's like it's my thing and only I can, have this coin, and it's just really not how you do it these days, at least in my mind.
I agree, man. I completely agree. On the what was I gonna? I had one more point on like the consolidation, something around that, but it's not important. I feel like those are the big stories.
Can we talk about this Robert Leshner Treasury company thing?
Oh yeah. Okay, so Robert Leshner went out and purchased a little liquor company that was, I think at the time, so it was trading. It's a publicly traded company, but at the time, I think it was for just over $2 million of market cap. Okay, so here we go. Okay, so Rob Leshner acquired, basically a controlling stake in LQR House, which is a struggling liquor company. So I'm just going to read this tweet thread that he did, which is, I bought a controlling stake in YHC, a low market cap liquor company with a somewhat shady history. My plan is to replace the board and help the company explore new strategy. I have not done extensive diligence. There are signs the company's up to no good. I will sort them out, et cetera, et cetera. Personally, investing in YHC was an experiment with an uncertain outcome. My original plan was to buy the company outright and to put it on track to build a crypto treasury strategy under new leadership. I was partially successful. He relied on public disclosures of how many shares the company were outstanding and their shelf issuance capabilities. The numbers reported in brokerage apps became increasingly out of date as these shares entered the market and diluted shareholders to the point where my stake no longer has meaningful control. So basically, Rob also has this company, Superstate, and they've recently announced the ability to essentially go public on Solana. So I'm making some assumptions here, but it seems like the idea would be he tried to control, basically outright acquire this liquor company for $2 million, make some changes, turn it around, yada, yada. It didn't work because these challenges with, the amount of outstanding shares weren't clear. And presumably this is something that Superstate fixes, but this thing has done like a 5x or something like that since, I think it's at $10 million or something like that today, but I don't know. What do you think about? I think it's kind of cool. I actually sent it to Jason. I was like, I feel like this is a screaming buy, right? But I didn't buy. So
pull up the tweet I just posted in chat. I mean, code is not law in TradFi, and then he just gets like ATM to death.
So what happened here? Robert Leshner gives up trying to take control of NASDAQ listed LQR House after the original 56.9% stake gets diluted to 8.7%. That's so funny.
When you play in the TradFi universe, it's just a different game. You gotta put a helmet on because they don't fuck around. They will just ATM you to death on a moment's notice.
They will.
Tough to see.
Tough to see. Well, hopefully it was still successful for you a little bit there, Robert. Obviously, always rooting for fellow crypto people, but yeah, it's a funny little thing. But anyway, Vance, was a fun one. Michael, hope you are completing your fitness journey.
Seriously.
Style somewhere. Yeah.
Hopefully.
All right. We'll see you
thanks a lot,
next
man.
week.
Bye.